Good afternoon, dear shareholders, investors. Thank you so much for joining on this call. Welcome to all of you. I think we have about how many people do we have on the call right now? 11 people on the call. So, okay. If it's okay with everybody, we will wait for another minute or two. I think we are expecting a few more people to join. So with your consent, we'll just wait for another maybe couple of minutes. It's now 4:01. We'll start around 4:03 if it's okay with everybody. Yeah, thank you. Yeah, so I think we can start. So once again, good afternoon to everybody, and thank you for joining this Q2 call. Before we start, as usual, safe harbor. So this document has been prepared for information purposes, and it's not an offer or invitation or recommendation to buy or sell any securities of the company. And this document shall not be the basis on which you can rely in connection with any contract investment decision related to the company. So I'll just read the first line. The rest is on the screen. So I hope everybody's taken note of this. So let's move to the next slide. Right, just a quick overview. I think a lot of the people on the call are already familiar with the company. So we just thought this time we'll make it very crisp. So if you look at the company structure, basically Triton Valves Limited is the holding company, right? And this is also the automotive vertical of the company. Automotive vertical has basically B2B sales, that is tire and tube valves that go to the tire industry, tubeless valves typically supplied to the vehicle manufacturing industry. We also make EV components that goes into the EV two-wheeler industry. TPMS valves, these are products which are sold to the sensor manufacturers for tire pressure sensors. Valve cores, of course, is an accessory that is sold along with the other products to the B2B segment. We also have an aftermarket segment. We like to call it B2B2C, where we distribute our products in the replacement market. And of course, we have exports. The holding company has basically three subsidiaries. One is called Triton Valves Hong Kong Limited. This was set up prior to the COVID period for kind of managing our imports and exports in the region, Southeast Asia. It's currently practically inactive. We are not doing any transaction from there right now. Triton Valves Future Tech Private Limited is our metals business. It's also a bit of a backward integration, right? It's the raw material company that supplies the raw material to the holdco as well as to the other subsidiary, Triton Valves Climatech Private Limited, which makes components for the AC industry. And of course, Future Tech also supplies to the external market, right? So that's how the company, the four companies are structured. Let's move to the next slide. Right, a quick snapshot of how the quarter panned out for us, Q2. So the green boxes are things that went well. The red boxes are things that didn't go as per our expectation, which we are working on for improvement. So if you look at automotive vertical, I would say we had a very good increase in sales volume. We'll show you later our actual volume sales went up almost 20% year on year, right? And we also got a good, I would say, a favorable product mix. And this has definitely helped us in terms of our sales revenue and margins. Also in the automotive vertical, I would say our commodity management has been fairly optimized and fairly improved during Q2. So we had a lot of challenges during Q2 in terms of the commodity pricing. So as we all know, we do a commodity indexation of the commodity price with our customers. So usually there will be a 3-month lag between the time that commodity change happens, hits our books, and the time that we transfer it to our customers. Right, there is normally a 1-quarter lag. In spite of that, I would say we managed the quarter fairly well. If you look at the metal vertical, we had a little bit of, I would say, hesitation on the side of the market because of the sudden rise in copper. So as we all know, copper went from, I don't know, somewhere about 9,000. It's now trending very close to, I would say, 11,000. Right. So we saw about 20-25% increase in the copper price over the quarter. So usually what happens is that when there is such sudden and steep rise in the pricing, a lot of customers tend to slow down a little bit, right? So they order lesser quantity. The working capital cycle also gets affected because 25-30% increase in a short span of time is quite a heavy hit for the manufacturing industry. So we saw a little bit of, I would say, orders getting delayed. Luckily, most of these orders will flow into our Q3, right? So I will say that it will get averaged out, evened out over the next quarter. But yeah, we did face a little bit of, I would say, slowness here and there from customers in the metals vertical. Climate control vertical, I would say we had a much more difficult quarter. So here, basically, what happened was, as we know, the AC industry this year has not been doing well because we had a very, I would say, short summer, right? Practically across the country. AC industry basically looks at India as North Zone and South Zone, right? And both North and South, I think the rains came in very early and they kind of, extended throughout the entire summer and into the almost into the autumn and winter season as well, right? So of course, GST rate cut and all that came in September. And that will definitely see us doing much better in the climate control vertical in Q3, right? But I would say Q2, and of course Q2 also seasonally is the worst quarter for the AC industry. You can see even the large players in the AC market. Q2 is actually the worst quarter because July to September is when almost no fresh sales happens, especially in the B2C category. So of course climate control vertical, Q2 was not good. Let's move to the next slide. Yeah. So this is the standalone, I would say, numbers for Q2. So if I look at the year-on-year growth, right, we've just broken up our sales into product sales and other sales, right? So as we've explained perhaps in earlier discussions and presentations also, because we are in the, our products are made of brass, we are in the brass industry, we have a significant, I would say, sale of brass scrap. So when we produce our product, we generate brass scrap as a byproduct, and this byproduct is sold, right, either back to our own subsidiary, or in the past we used to sell it to an external, let's say, brass mill, a vendor. So actually, if you look at it, last year our product sale was about 62 crores. This year we have moved up to 74 crores. Whereas the sale of scrap, right, we actually reduced a little bit during this quarter. So on the top line growth, you're not able to see that 20%, right? But 20% is the actual real growth, which I would say is a very good performance for this quarter. Of course, the tire industry has done fairly well during this quarter. I would say even the vehicle manufacturing industry did fairly well. So I would say overall we took advantage of the favorable conditions and we pushed out this growth figure of 20%. We are achieving a 20% quarterly growth after a very, very long time, right? So I would say company has done fairly well in that regard. We have normalized the EBITDA. So when you look at the EBITDA line, During the quarter, we had a celebration of 50 years of the company. So we had certain one-off expenses related to the celebration. We had a big event in September where we invited a lot of our customers, our business partners. A lot of people were invited. We had a fairly grand event, I would say. So we spent about 80 lakhs towards that event during the quarter. So what I've done here is I've basically kind of normalized the EBITDA by taking out that one-off expense, right? Because that's not really related to our operations. So if you look at it, if I normalize the EBITDA, year on year, I would say we've gone up by almost 115, 116 basis points. This is of course something that we have taken this on the total revenue, which includes other sales as well. If you look at it on product revenue, it would be slightly better than that. PBT, obviously, if you normalize it, we have also done fairly well. I would say we're up almost 152 basis points on our PBT, and we do expect that some of this momentum will carry through into Q3 as well, right? Because when I really look at third quarter coming up for the company on standalone basis, Q3 typically is seasonally a little, I would say, slow, typically because there are a lot of holidays during the beginning of the quarter. There is Navratri and Diwali, and towards the end of the quarter, normally our customers go for shutdowns. Where the last week of December, typically they take maintenance shutdowns. It could be Maruti, Toyota. A lot of the auto industry shuts down in the last week of the year. So typically it's I would say not a very strong quarter momentum wise, but so far whatever we are seeing, I think we will be able to sustain the momentum, whatever we've generated in Q2. Largely we believe that Q3 we should be able to sustain, right? Let's move to the next slide. Yeah, so if you look at our console numbers, this is group consolidation. We moved up obviously year on year about 11%. For the quarter, we went up from about 118 crores to 131 crores. Here also, if you look at the normalized EBITDA, it comes to about close to 10 crores. So I would say we are steady. Here, I would say in spite of the fact that the climate control vertical performed very poorly during the quarter, we've still managed to, I would say, keep our EBITDA stable, which is, and in absolute terms, we've actually increased our EBITDA in rupee terms, even though in percentage terms, it looks quite flat. So I would say that, this also can be interpreted as a certain degree of resilience in the business model, because in spite of, one vertical not firing well, we are still able to keep things stable. So, of course, the metal vertical also, I believe that Q3 will be a better quarter. So if you look at our metals vertical, which is also in the consolidation here, Q3 tends to be a better quarter, right? So Q3 is a hedge between, I would say, our automotive vertical and metals vertical. And that's how perhaps, we've kind of structured the three entities so that, off season for one entity is a good season for the other. And that's how, in the long run, we hope to kind of balance out the dynamics of each vertical in the group consolidation. So this is the, I would say, console position. Let's move to the next slide. Right. So now we've just tried to show the YTD figures, right? If you look at H1, right? If you look at H1, on the left-hand side is the standalone numbers, and the right side box is the group console numbers. So if I look at the standalone numbers, I would say we are still growing at about 14.5% overall in terms of product sales for the half year, which I would say all factors considered is a decent growth, right? As we all know, in the first quarter, automotive sales were actually very sluggish, right? If you look at the passenger vehicle industry, if you look at the truck and bus industry, first quarter was actually quite flat. Second quarter, we did see some growth, but I can say with a lot of confidence that the first quarter or the first half, we have performed much better than the industry average, right? So 14.5% volume growth, I would say, is a fairly good growth for us. If you look at margins, of course, there is still a lot of scope for us to improve our margins. If you look at our normalized EBITDA, we are about 7.5%. Again, 100 basis higher than the previous year. I would say more work will happen on this. There has been a discussion, I think, which we had during the last investor call also about how much effort we are putting and what is our plan for improving our EBITDA. So I want to assure everybody that there's a lot of actions being taken on EBITDA improvement, and I'm very confident that through Q3 and particularly Q4, a lot of that will shine through. Right. So what are the actions that we are taking on EBITDA improvement broadly? I would say that one, there are certain unadjusted costs that we have kind of built up over the years, especially post-COVID, which the customers have not adjusted for us, right? Our manpower costs have gone up, our consumable costs have gone up, our inventory and fund block has gone up, because you can imagine 5 years ago, brass was, I would say, about 400, 450 rupees a kilo. This is the main raw material for us. Today, brass is actually at the current moment, the spot price in the market is like above 700 rupees a kilo, right? So obviously to do the same business, we require more working capital, we require more funds, and those funds obviously come at a cost. So these are the kind of costs that have gone up over the years that many customers have not yet adjusted. We have started the process of taking those cost adjustments, and I'm happy to report that many of our customers have been taking I would say, a fair view. They have been supportive to us. They have been, understanding, and some of them have passed on partially some increases during Q2. More will be coming in Q3 and Q4, right? So some of the customers have principally understood and accepted that yes, we need to adjust these costs. But as we know, in the industry, these are very old relationships, so they tend to say, okay, we will do it from next quarter, or we'll do it from January. And sometimes, we have to be a little bit, I would say, reasonable on our side also, to give them a little bit of time to make those changes. Because obviously, while we want to, transfer these costs, we want to also make sure that, we don't take a hit on our sales, right, and our share of business. So far, if you look at the first half, I would say the fact that we've grown sales as well, and we've managed to adjust costs here and there as well, I think it shows that we are in the right track. We have to just keep now, pushing a lot of our customers who have not yet adjusted these costs. We need to push them to get this cost adjustment done. The other thing that we're working on internally, obviously, is there's a lot of, I would say, internal effort at EBITDA improvement. So cost rationalization, I would say, material cost improvements. There is a lot of, I would say, effort going on internally. And a lot of these benefits, I do believe we will see going into Q3, particularly into Q4 as well, because the Q4 sales also we expect seasonally Q4 is a better quarter for us, and we will see the full impact of that coming through. In terms of what is our, let's say, goal, obviously, we are at currently, if I look at our normalized EBITDA, we are at about 7.5%. There's at least another 2.5%, 3% that we believe over the next couple of quarters we will be pushing for. So I would say that going into Q4 and maybe Q1, I would expect these numbers to come closer to the 10% mark, right? There's another positive factor for us. I would say some of our higher margin products, we are now seeing a lot of ramp up happening, right? These are products like tire pressure, TPMS valves. Even on the EV segment, right? We are very strongly connected with Ather, who's a very key customer for us. We are now working on some new components for them. And as all of you might have seen, they're doing quite well in the market. I think their Q2 results also came out yesterday. You can see a lot of strong growth. So I'm very happy that, we have associated ourselves right from the beginning with Ather. And we will also be hopefully growing strongly with them. TVS is also very close, very good customer of ours. Every TVS scooter in the market has our battery components, and we are expanding the relationship with TVS as well. So hopefully, the top 2-3 players, we are well entrenched. We are also closely now talking to Bajaj, Honda, and other players as well, where we will soon find some entry. So I would say, this is the reason why I would say Q3, Q4 onwards, we will see more traction on the EBITDA side. Coming to the Concall, right? Obviously, Concall revenues, we're growing at around 18% if I take H1 compared to last year. Margins, of course, there is still scope for us to improve. But here, a little bit, I would say, some of this revenue also has other elements, right, like scrap revenue and things like that. So if you look at the normalized EBITDA, we are at somewhere about 7% right now. We've reported 6.7. If you normalize, it comes to 7. So as we see traction coming into the climate control vertical, we see the metals vertical also. We have a lot of, I would say, plans coming up in future. We should see a strong, I would say, traction coming on the group consolidated EBITDA as well. I'll talk a little bit about the metals vertical here, since I have a chance to a little bit talk about what we are doing there as well. In the metals vertical, there are two, I would say, challenges that we need to overcome. One, we need to scale the regular products that we are already in mass production for. And I'm happy to say that, a lot of the alloys that we developed over the last 2-3 years are in mass production now, going well. So we need to scale the quantity, basically, right, of the output. Two, we are now, I would say, well and truly building that pyramid of special alloys where we get higher margins, right? So one alloy has gone into mass production already. Since it's a kind of a special alloy developed for a customer, we have an NDA in place. I may not be able to talk about the name of that alloy, but I can tell you it's an alloy which has a very good margin. We've received the first order of about 40 metric tons during the quarter, and during Q3 that will come into our books in Q3. Also happy to report that we have now secured our first order from a defense contractor in the Middle East, right? So as we know, we've been supplying our raw material to some of the defense contractors in India. Those volumes also are seeing good growth. But for the first time, using that reference, we have got an entry into one of the defense contracting companies in the Middle East. So the first order has already been executed. I think the second order should come in Q4, right? And if we are able to stabilize that, if we're able to prove our quality and we are able to prove our delivery capability, I do believe that could become a very steady long-term business for us. Because as we know, in defense, it takes a long time to break in. But once you're in, you tend to get very stable orders. So yeah, so these are the kind of, I would say, initiatives that we are taking that will ultimately result in EBITDA improvement at the group console level as well, right? Let's move to the next slide, please. Yeah, a quick kind of input from the balance sheet side as well. I think there were some concerns during the last investor call. I think some of the people on the call felt that our inventory was a bit heavy on the excessive side. So just wanted to show the investors what this number really looks like. So if you compare March and September, right, there is a slight increase in inventory. I would say we've gone from about 102 crores to about 108 crores. So roughly about 6 crore increase in inventory. But along with that, you can see, right, the payables also have increased. Obviously, receivables also have gone up because the size of the business per se has gone up, right? And if you look at the loan position also, there is a very slight increase, right? In the loan position, you can see net worth, obviously, because of the equity infusion, you can see that there's a increase in the net worth as well. So if you really compute the ROC, right, of course, I think here our CFO, Mr. Naresh, has kind of adjusted the number, I suppose, for the one-off item. But you can see the ROC. We are slowly moving up towards the 10% mark. We're at 9.5%, right? So just to set a context here, obviously our first goal over the next, I would say, couple of quarters would be to bring this number closer to 12, right? Because obviously a number below 12 is definitely not healthy, right? And once we get on that base and then start scaling both climate control as well as metals also starts really firing for us, we should see further growth from there on, right? We've also just shown what are the significant investments that have been made out of the equity loan funds and internal accruals March and September. So you can see loans reduced net of availment is about 3 crores. Capex investment so far is about 12 crores. This is from March. subsidy investments about 5 crores, loans given to subsidy about 4 crores, and the rest is in inventory, right? The warrants that were outstanding, right, up to end of Q2 were actually converted to equity at the end of Q2, that is end of September. So the 10.4 crores that we received as warrant conversion, funds, those were actually held in an escrow as of end of September. They were not able to be deployed because the procedure for sweeping the funds into operations were still not completed as of 30th September. Subsequently, that has been completed, and the money as of Q3 has been swept in for operations. Yeah. Right. A little bit about the performance levers for Q3 and Q4. Right. This is just kind of putting out there what I already spoke of. Obviously, we want to normalize prices, right, with our customers in the automotive vertical. And like I said, we are seeing some traction. Right. We've started the process in right earnest. A lot of customers have already supported, and more need to support us going through Q3, Q4. Obviously, cost improvement and fund allocation. We still believe that we have a lot of scope for further internal cost improvements as well as automation. There's a lot of work that is in the pipeline. Some of the capex actually we've shown here also. We are going to be spending for further automation of our lines. Also, obviously, allocating funds more efficiently. We believe that there is still some scope for us to tighten our working capital. And typically, when there is a huge increase in raw material cost, it becomes more and more critical, right? So we need to be more, I would say, efficient in that regard, which we believe we can squeeze out something more. If you look at metals vertical, obviously, we are in the process of commissioning our second line. We have been a little bit, I would say, delaying it here because, like I said, when there's a huge, increase in raw material cost, the cost of starting the new furnace, right, requires a lot of funds to start the furnace, right? Because when you start the new line, right, you need to line up. In our case, we have calculated it would be about 10 to 12 crores of working capital needs to be lined up because when you start the furnace, you need to pump in a lot of raw material to start the line. So I would say we've been just holding back a little bit and trying to extract maximum value out of what we have till the metal prices a little bit stabilize, because the fear for us was if we end up pumping in material at the peak price, if copper drops, and sometimes November, December is when the trading goes down, sometimes there are drops in the copper price, we felt we should not be wrong footed, right? Because we need to pump in a lot of material at the start. So that's how we've been a little bit, I would say, circumspect. Everything is ready, all the equipment has arrived. The power connection, of course, is still yet to be done. Unfortunately, there is some delay from the local utility because some road cutting has to be done of the national highway, something like that is there. But there is a bit of delay there in terms of the power connection being received. But all the other items, whatever we needed in terms of capex equipment, it's already placed in the plant. It's already received. It's already ready for start. Obviously, yeah, metals vertical, we will need to look at funding the increase in the raw material price, right? That's something we are working on. In terms of, I would say, Q3, Q4 for climate control, here I would say a little bit of the headwind that we are still facing is Government of India is still working on the QCO, which was in the pipeline. Now I'm told finally that this month it will get published. The draft will get published in the public domain and all of that. BIS code has to come out. So there has been, I would say, they have taken more time than what they should have really by now. And this is a complaint that we have consistently taken up with other companies. There are companies who have got into motors for the AC industry. They're also facing the same problem. They've developed the product, they've qualified it, tested it, but the Chinese are crashing the price and trying to hold on to their market share in India. And so this is the kind of context which we also are encountering. We will come out of it, right? It's just a matter of time because some of the customers now, just to give the investors a kind of a picture, today I would say amongst the top 5 AC manufacturers in India, every single one of them has approved our product, right? All the testing has been completed, all the formal approvals have been received. So if you look at LG, Voltas, Daikin, Panasonic, Samsung, right? And the smaller players also. There are players like Havells, Blue Star. Every single one of these companies has tested and confirmed that our parts are okay. They are validated in the field as well. So we are literally ready for start. Now it's down to price negotiations where people are comparing us with China and saying Chinese are still at a lower price. So that's the kind of, I would say, pressure that we are finding here till the time that QCO comes in. Once QCO comes in, I think we have a first mover advantage. We are literally the only company in India producing a lot of these parts, right? So we believe that that advantage will come to the fore at some point of time. Of course, we are merging the climate control vertical into the holdco, right? That's also a process which we believe will get concluded in Q4, right? So once that happens, we have I think, an income tax shield of around 4 crores. There's also GST lock of about 2.5, 3 crores. So about 7-8 crores of cash flow benefit we will receive once the merger of Triton Valves Climatech Private Limited and Triton Valves Limited gets concluded. We expect that to happen during Q4. Next slide, please. Yeah, good. Thank you. So that's it from my side for now. We'll now open up for questions.
Yeah. So, sorry, you explain for the start of the
okay.
So,
you want me to mute from my side?
So, good afternoon, investors. So before this Q&A session starts, a small disclaimer for your reference. So the meeting is under recording mode, so it's under progress. The discussion may include certain statements that may be considered as a forward-looking statement. This statement is made based on the company management current strategic and assumptions. We can't guarantee that the forward-looking statement will be realized, although we believe we will be prudent in our assumptions. We undertake no obligations to publicly update any forward-looking statement, whether as a result of new information or a future event or otherwise. Q&A session will be open only for a span of 15 to 30 minutes. Investors are requested to unmute and show their video and mention their names or the organization name or their DPID and client ID, and from the location from where they are joining. All the questions asked by the investors will be collated and the consolidated replies will be furnished at the end by the managing director. Investors may also note that the company reserves the right to limit the number of questions asked by the investors. So, however, investors can ask subject to maximum of 2 questions. So, with this note, the Q&A session open for the investors.
Yes. So I think we've already received one in the chat box by Mr. Digant. So maybe I'll start with that if it's okay with everybody. Mr. Digant is asking how much order book do we have? Well, we don't actually work on an order book basis because most of our customers are running accounts, right? Both in more or less all the 3 verticals. But to give you a flavor, maybe I can tell you a little bit about our metals vertical, where we do operate a little bit of an order book kind of methodology. So I would say our order book right now in our metals vertical in Q3 has a little bit caught up with after the little reduction in Q2. So today I think our order book is higher than our theoretical capacity right now, right? So I can assure you that the traction, whatever we were expecting in Q2, has well and truly got transferred to Q3, right? So we are holding a very significant order book. To give you an example, I would say as of today, I think our order book is more than 700 metric tons in our metals vertical. The other 2 verticals, we don't go on an order book basis. It's like schedule to schedule, order to order kind of thing, where customers will tell us the order just a few days before they need the material. Next question: how has the new order booking? Do we expect to secure any significant orders in coming months? Yeah. So here maybe I can give a small flavor. We've been working very hard behind the scenes to get into some of the global accounts for TPMS valves, right? This is the latest technology. This is really, I would say, a bit of a technology product where obviously our margins also will be much better. So I think in the last investor call, we spoke about Robert Bosch, Germany. Happy to report that that program has already gone into serial production. In fact, I think that program is running roughly 1 year ahead of schedule, which means that the volumes that were committed to us of 2027 we are probably going to see in 2026 itself, right? So that's a program that's going very well for us. Also there, I would say the currency calculation will help us out. I believe we costed that program when euro was about 90. Now the euro is much higher than that. So we should see some good, I would say, margins as well and good volume. So Robert Bosch is in full swing, right? That order is, or I'd say that program is in mass production. The second program we started actually with another German company with operations in the US, right? A little bit I'll talk about that. In spite of the 50% tariff, I'm happy to report that we have just received 2 new additional orders during this quarter, Q3. Hopefully, we will execute both the orders in Q3 itself, right? It's not a very, very large order. I would say about 1.5 crores in value for the quarter. But what is significant in that is that in spite of the tariff, the customer is continuing to place orders. That's a very positive sign for us. It means that there's something about our product that they like, right? That in spite of 50%, they're able to still place orders, and we do expect going into Q4 some further orders coming in from US market. In terms of margins, I can say typically, if you look at the TPMS product, EV product, it'll be almost an order of magnitude higher than the older products, right? So on average, I would say we should see a margin, let's say, expansion of anywhere between 500 to 1,000 basis on the new products, right, which we have developed. Those could be battery components, those could be TPMS related components. Those are typically higher margin also. Cash in the balance sheet increased to 13 crores. This is basically the warrant conversion funds, right, which we had to park in escrow as of 30th September, right? What will we do with this? Yeah, definitely. Yeah, go ahead, Naresh. Maybe Naresh can take that. Yeah.
So, I think, good evening to everybody. When we do for rating CRISIL or any rating, they expect us to be lower than the sanction limit. So what we plan to do is to reduce our floating working capital to a great extent, and possibly allocate 2 to 3 crores for future, like the metals business, where it requires, where we can get price advantage. So this will be like a war chest available with us. We don't intend spending it. We'll always avail on tap. So we'll go and reduce not the term loan, because once we reduce term loan, get a new loan will be tough. So we reduce the working capital floating loan. In a way, we reduce overall debt. Plus, whenever we require, we can tap it because the sanction limit and drawing power will be there. So that's one way where we thought rather than repay the entire term loan or put in capex, we use a portion as a war chest, let's say 4 to 5 crores. The portion will definitely swing between the metals business and the climate control business for the purpose of profit optimization and sales growth. Yeah, so that, and the average cost of debt, we have about 9.3% is what we are seeing now. It was 9.2% 3 months ago, but again there's a slight change, so we went down 9.3%. Yeah, so the OTMP for 6th and 7th revenue target.
Yeah, revenue target for FY26, FY27. See, I don't want to put a number right now for FY26. If you look at our TTM, trailing 12 months, I think we are trending somewhere in the range of, I don't know, 530 crores or so at group console level. But yeah, this is something that obviously depends on how Q3 and Q4 pan out for us. As long as there is no, let's say, shock in the market. But I would say we are trending fairly okay. If I look at more than FY27, I would like to talk about, the next 3-year target, right? So we've said this, I think, in the past, so I don't have any hesitation saying it now also. The first real milestone that we are all looking at in our company is to touch 1,000 crores, right? That is going to be our very first, step in terms of, bringing our revenue to 4 digits. That's something that, we're all working for. When will that happen? It could be anywhere in the range of, I would say, 3 to 5 years. I'll give an example right now, like we were talking. This kind of, sudden rise that has happened in copper and all of that, it tends to kind of, tighten the working capital, at least for a limited period of time, maybe for 1 month, 2 months, till the whole, cycle comes into rotation. So there are going to be, some ups and downs in this journey, right? It's not going to be just a straight line, up. But the good part I would say is that if you look at our last 4 or 5 years, I think we've not really slowed down, right? While obviously we have a lot of work to do on EBITDA improvement, we are not compromising on our growth prospects. We are not letting go of any opportunities on the table, because I firmly believe that the next 5-10 years are going to be a golden era for manufacturing, right? So even if it means that we have to little bit strain ourselves now, we've all invested in the metals vertical, we've invested heavily in the climate control vertical. Those bets, even though they are still yet to reach a critical mass of returning massive returns to the company, we don't regret those bets, because the market is there. Just to give you an example, this is something I've been debating with Government of India. Last financial year, India imported 600 crores worth of AC components, which we produce in our company, right? So I've been telling government that you're doing something crazy. You're allowing these materials to come in duty free, right? And to a large extent, I strongly believe that the unfair trade practices are happening, because these are products which are produced in China, just being routed through Vietnam and Thailand for the duty benefit. And then the local industry is holding us against that number and saying, now you reduce cost against this target. It's unfair. It's frankly an unfair trade practice. I don't think government should be allowing this for much longer. Unfortunately, that has slowed down our growth in the climate control vertical. But in spite of that challenge, I would say we are up to it. We have done a lot of cost optimization. We've used that opportunity to tighten and strengthen ourselves. So we will see a lot of traction once these creases get ironed out. So I would say more than FY27, if I look at FY28, 29, 30, we will definitely be aiming for 1,000 crores, right? EBITDA margins, I think I've spoken about it. I think our first milestone is to get into double digits. Looking at Q3, Q4, if our plans work out well, at least on the standalone business, I believe that we should be able to reach close to 10% by Q4, right? And then at the console basis, console level, basically we'll have to fire up the climate control vertical very strongly, and ensure that our metals vertical also climbs up the ladder, climbs up the EBITDA ladder. Once those two also get going, we should be able to see EBITDA margins coming to 10% and above, right? So I think I've hopefully answered all the 7 questions. Can we move on to the next question? Yes, happy to take any further questions. Anybody else would like to ask? Please feel free. Sometimes it's a good platform to share with the world. Yeah, Mr. Vigan says. Yeah, Mr. Vigan says, don't you think 1,000 crore? Yeah, I'm not saying 5 years, frankly. When I say 1,000, doesn't mean exactly 1,000 also, right? But yeah, I mean, look, it all depends on how we fund ourselves for that kind of growth. And also, I think what we're also realizing as a company is that we need to drive profitable growth also, right? So I think this has been something that repeatedly a lot of the investors have kind of brought up with me, and I think it's a fair criticism that we have received from the investors that, for the efforts that we are putting, for the kind of technology that we have, we should be having a better profitability, which I think that's a very fair criticism that is leveled at us. So I think we are also having to fix that as we grow, right? So I'll put it like this. It doesn't mean that 1,000 crores only going to come in FY30. I definitely won't put it that way. Obviously, we need to push growth as quickly as we can. Like I said, we don't want to leave any opportunity on the table. But having said that, I don't want to create an expectation which is going to put pressure on me, and it's very important for me, Stigant, also to put my head down into operations, right? Because it's very important for me to keep my eyes on the ball in terms of, we have three verticals. All the three require, capital allocation. All the three require, so there are a lot of opportunities that come on the table, and it's something, I have to look at both top line and bottom line. So I'll put it like this: in case we don't come to the number of revenue that we need to, or we're aiming for, even if we don't hit what we want in terms of revenue, we will definitely hit whatever we want on the EBITDA and bottom line side, right? Because the focus right now, to be very frank with you, it's more on the bottom line. We really want to show to the investors, show to all the shareholders that this company can actually operate at a much better margin. I think that is where we are putting a lot of effort. But we'll not let go of any opportunities, I can assure you about that. So let's see how it goes. 15% year on year, definitely we will not be satisfied with. You can see even in current year, right? As I said, Q1 was not a very good quarter for the auto industry. We are still growing, I would say 18% plus, right? So once we, we fire up climate control, we fire up metals vertical, 15% will definitely not satisfy our, let's say, ambition, right? So 15% is not the number we are aiming for, I can assure. Yeah, so I'll put it like this. At bare minimum, the way we are kind of, looking at it, I'll just move on to the next question. I think it's Mr. Shanki Bansal has asked a question. Can you please share what is the contribution of EBITDA of Future Tech in the consolidated numbers? Would there be an impact on company performance due to volatility? So I'll put it this way. The good part for us is that, some of the volatility will actually benefit us. Okay. So let me just explain to you how we have structured Future Tech and the other two businesses, the component businesses. So I'll put it like this. Another way to look at our company is to look at it as we have a component business. It could be automotive, it could be climate control, and we have a commodity business, right? Now in component business, typically what happens is that when there is volatility in commodity, let's say commodity price suddenly shoots up, right? What happens is we bear the impact in the beginning, right? And then we pass it on to the customer in the subsequent, right? In the commodity vertical, the exact opposite happens, right? We have a rolling inventory. If there is a sudden increase in, let's say, copper price, typically what would happen is that we would be selling our material to the external customers, right? At an immediately revised price, meaning that copper goes up, we will be quoting a higher price. My rolling inventory will be still there at a relatively lower price. So what I will be losing in the component business, I will be gaining in the commodity business, right? So that's the kind of play that we have structured the company to have. So ultimately, I'll put it like this: in the long run, it will be EBITDA accretive to the group, right? We will be sometimes losing here, sometimes we'll be gaining somewhere else. And there will be certain situations where we'll be gaining in both places, right? So the way we have structured it is that either commodity and component businesses should gain, or if one loses, the other should balance it out. But we should not allow both to take a hit simultaneously. That's the way we are kind of structuring the whole business. Coming back to Mr. Digant, what are we targeting bottom line? So I'll put it like this: a simple back of envelope would be something like this. We would obviously, by the time we come to 1,000 crores, we would want our EBITDA to cross 10%. right? So we would look at, let's say, a scenario where we would, let's say, wish list would be, we should get to 1,000 crore as quickly as we can. And while we get there, our EBITDA also should grow to at least 10%, right? So about 100 crore EBITDA on a 1,000 crore revenue would be our bare minimum, let's say, expectation as we kind of, develop the model to touch that 1,000 crore number. Right, so I'll just wait for a couple of more minutes in case there are new questions. Thank you, Mr. Digant, and yeah, happy to take more questions. We still have another 4-5 minutes to go. So I'll just put myself on mute. If anybody would like to type in a question or anybody would like to ask, happy to take. Thank you, Mr. Shanki. Thank you. Appreciate your comment. And again, open for another few minutes. So please feel free to ask. Anybody else also who would like to ask, please feel free. Any plans on monetizing patents? At the moment, to tell you honestly, not directly monetizing in terms of licensing it or something like that. But yeah, so the pressure relief valve for battery pack, yeah, it's a patent that it's a precious patent that we hold today. And so far, I would say that, the fact that it's patented and the fact that, it's performing in the field, it's really gaining traction for us. Maybe since you asked this question, I'll talk a little bit about that product line. So basically, we started working on making battery components for EVs way back. I would say the work started on this somewhere about, I would say, 2016, 2017. And that's where I was saying also earlier in the call that we are quite fortunate that we got a customer like Ather. They've been extremely, I would say, kind to us. They've been extremely supportive to us. And they helped us actually on this journey in terms of, understanding what this kind of component really, how it needs to perform, what are the performance requirements, what are the expectations, how, battery packs behave, how, the cell chemistry plays a role in terms of, these thermal incidents that happen in these battery packs. Frankly, we didn't know anything about it, right? I have to be very honest. In 2017, if you asked anybody in our company about battery pack, cell chemistry, we didn't know anything, right? So we learned a lot engaging with the ecosystem, and that helped us to kind of understand the requirement. Therefore, we generated that patent. We came up with some ideas, and we found that nobody else had done it, so we patented it. It's actually helping us today because see, the typical, I would say, habit in the auto industry, if I like to call it, is that they will ask a certain vendor to develop a certain part. Once the part is developed, goes into mass production, they will ask another 2-3 people to come into that industry to kind of, make the cost competitive and bring down the whole, the margin for the supplier. Unfortunately, that's how it works, right? So the reason why we patented it is that we wanted to ensure that we don't get into that situation where, somebody copies the product and then starts, trying to, hit our margins, right? That was the whole thought process behind patenting it, because we really worked hard for it. We spent a lot of money developing that part. The good news I'll tell you is that because it's patented, because it's performing, more and more customers are coming to us. We have recently started working with somebody whom I believe will also scale up very fast in the battery industry. It's Reliance. I'm very happy to tell you all today that our parts have been qualified now by Reliance New Energy. That is their battery vertical. They, I think, are going to scale up very fast. They're going to be supplying batteries to a lot of the EV manufacturers. So we are starting a program with them also. And I can tell you that in Q2, and also I'm seeing a lot of traction in Q3, because we are, single source for both Ather and TVS for this component. we are seeing huge growth. In fact, if I look at the PRV, I think we showed it, I think in one of the presentations. If I look at the growth in PRV sales, we are probably 60% up from last year. Right? So the EV product line is growing right now at 60% year on year in terms of quantity sales, right? And those are obviously better margin products for us, right? So yeah, so in that sense, we are monetizing the patent. I mean, we are taking full advantage of the patent, right? But should we license it out to somebody? Should we offer it to somebody? Well, it depends on how the market pans out. Honestly, difficult to forecast today. But if somebody really maybe in the global market wants to, associate with us, or they want us to license the patent, we'll have to look at it at that point of time. Yeah, I think we are almost at 5 o'clock. So, any last question before we close? Okay.
Can I make?
Yeah. Okay. So, so I'll just hand over to our group CFO, Mr. Haresh, to just offer some closing remarks.
Mr. So, I'm just happy to share. We got a call, not a mail, from Deloitte, that one of the 2 companies in Karnataka which had no problem with record audit. That means they've been checked. Deloitte checks thoroughly, but they also got it checked by their independent peer review. We are one of the 2 companies in Karnataka which have got a clean record. So I'm just telling you, while we are doing everything which we can, we're optimizing cash flows or growing revenues, we are also doing the compliant way. I mean, thanks to all the directors and the management, the way we are, it's a transparent and consistent. These are 2 words used by Deloitte partner. Nothing came in on record or mail, but just a call. Normally, Deloitte would not use a kind of a call. And Indian audit system, typically, if something wrong, they report. If something good, they don't. But I thought I should share with you that the stage that's as cash flows and PBT and all the questions which you asked are actually close to our heart. So is our compliance and the way we do our business as a good corporate citizen. Just I want to share with you, and thanks to the faith that's reposed in us. So we'll deliver on cash flow as well as compliance and the growth. Thank you.
Okay, so there's just one last question that's come in again from Mr. Shanki Bansal. I'll just quickly go through that. The question is something like, you indicated an aspirational target of 1,000 crores. As we think about that scale up, can you help us understand the intended business mix behind this growth? And do you see 1,000 crore profile being driven by future tech? What's going to be the breakup? So we've done a lot of, I would say, scenarios and I would say internal forecasts for what that 1,000 crores is going to look like. But just to give you at a very high level, right? We believe that it will be roughly 400 crores each coming from the automotive business and metals vertical, 400 each, and the remaining 200 coming from climate control, right? Because climate control has huge potential. Like I said, last year, India imported 650 crores worth of service valves and the kind of components that we make. So the market is enormous. So even if I take a very conservative estimate, I think 200 crores coming from climate control is absolutely doable. Right? Maybe a lot more than that. But like I said, it's my job to be conservative while forecasting, because I can tell you that 3-4 years from now, the climate control components that we have in our pipeline already, without adding any new products, the market size itself will be somewhere in the range of 1,200, 1,300 crores. It's a huge market, right? So 1,000 crore, like I said, it's really, I agree with you that it's not really a very, very ambitious number, but having seen certain ups and downs for the last couple of years, right? I'm just being conservative. I'd rather be conservative. I'd rather promise less and deliver more than the other way around, right? So that's perhaps why I'm being a little bit circumspect. But yeah, I would say precision engineering for sure will continue to be our focus, because that is going to give us value addition, right? The commodity business, it's primarily meant to kind of be an internal hedge against the commodity movement. But at the same time, we are finding very interesting opportunities for like I said, high value alloys, special materials, and material technology also is something that in India is woefully lacking. I mean, today a lot of the customers, like I said, even some of the defense contractors, they're literally not able to find somebody to make some of these special alloys. It could be, just to give you an example, there are bronzes. There's aluminum bronze, there's aluminum silicon bronze, there's high tensile brass, there is copper chromium zirconium. There are, a lot of materials today. There is nickel silver wire, which goes into, writing instrument industry. It's a shocking thing that, there is no company in India which is able to produce it at scale. Not even one company. See, we're a 1.5 billion population country. We feel sometimes ashamed that there is nobody in India doing this kind of stuff. And if we succeed, right, these are high margin products. I mean, it's not just that we are doing a service to the nation. We are also going to earn very good margins, right? So it's a win-win. There's another thought process that we are working on. There's a lot of landing gear related components that India is trying to localize in the defense sector, and a lot of those landing gear components also require special alloys, right, which are also not available in India. So we're already in touch with certain people to kind of look at those opportunities as well. So yeah, so there's a lot of stuff. So I would say precision engineering, of course, will continue, but also we will get stronger and stronger in material science. Right? The combination of the two obviously will unlock a lot of value for us and margins and profitability going forward. So that's the way we are looking at it. So I think we've just crossed the 1 hour mark. So thank you, everybody. Very nice questions. Thank you so much. It was very, I would say, stimulating for me also to answer a lot of these very interesting questions. Thank you for your patience also. I want to thank each and every investor for your trust and confidence in us. And like Naresh rightly said, while we're doing all, I will be that we are not going to be taking any risks on compliance. In fact, we want to set benchmarks in compliance, and happy to know that Deloitte also appreciated us. We are one of the files that came out absolutely squeaky clean after 3-4 months of peer review and all of that. So I think that's testament to the fact that we want to drive growth, but we want to do it the right way, right? The right governance and the right controls in place. Thank you everybody for today, and look forward to seeing you whenever next we organize a investor call. Thank you so much. Have a good evening.
Thank you. Thank you.
Thank you. Thank you, everybody. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.